Warriors, we have Mr. FX with us today as our guest. Do you guys know who it is? Hi, Mike, Ingmar, how are you? Blake, Bran, hi, Ryan, Steve, K-Man, James, AJ.
Hey, good morning,
Hey,
Coach. Can you hear me okay?
yeah,
Okay, everybody says I've been quiet today on my microphone or in earlier meetings, so I just want to make sure you can hear me okay.
uh, I I can hear you fine.
Okay.
Brant saying you are low.
Yeah.
Okay. Anyway, well, good day, everybody. We'll get to the markets now. How about that? Let's see. So high ho silver. And anyone remember what television show that's from? High ho silver? I didn't think you guys would know.
Lone Ranger, baby.
All right. So so let's start with it. All week when we were doing this, I said one more high. I mean, it gave you two chances for a third drive. This was at the end of the Adam Button interview, and then, that was probably a 5-minute candle. Anyway, the worm has turned. Um, Gold silver ratio bottomed, or at least a bear market rally. And, the bulls have to defend that silver made new highs, gold didn't. So um, it may not be a layup for new all-time highs into year end. That's a narrative I've been hearing a lot. And, I want to tip my hat to Ryan on his yen trade because you know what? We all use something that we depend on, but sometimes they could mislead you. I'll probably never catch a top like this if I'm disciplined and follow my work because confirmed on multiple time frames. So that's not how I top pick. But Ryan's a levels guy. He doesn't let this stuff confuse him. And that was really a great trade without a lot of technical support except important levels. So there's a lesson for you. You could keep it simple and just know your levels and trade
Okay.
that way. Yeah. Yeah. So there weren't a lot of people short in the end when you were doing it, buddy. So
No, maybe not. That's what we look for, isn't it?
yeah. Yeah.
Nice when they
So
come off.
we're at a little bit of a support level here. Um,
Yeah,
on the 4 hour moving average, and I have a black line here, so must
yeah, I've
mean
got a line there as
something.
well. Yeah, the key could be this breaker 155
Yeah,
because we broke it a couple of days ago, but it, for 5 minutes and it got back above. If we hold,
yeah,
and the fact we've made a new low in this move is significant as well. So that sets up the possibility that this 155 level is broken. So that's going to be really your lean against point. If we can't get back above there, people who are looking for shorts in this pair, that's the level you want to look at. Yeah. So we had three candles there
yeah.
at 155 before we broke it.
And
So
it
yeah,
actually came back inside of the overthrow. So that's another
yeah,
negative. So that was a pretty good overthrow
yeah.
because
Let's see
I
where
was
it goes from here.
shorting it into it. It made me think of my friend. He said, Dale, how many times do you have to get hit in the head with a ball peen hammer to know it hurts?
We've all got those bruises, haven't we?
Yeah, I got a couple dents in my head. So, all right. So, bro, why don't we follow through with what's happening with Euro? Um, it's hesitating a little bit here. And the Dixie's only about, 70, 80 pips away from where I'm going to start looking to play the long side of the dollar.
Yeah, you're
So,
98 level, isn't it?
yeah, I think we could get there, but we might have a little bounce.
Yeah, it's run into a bit of sticky glue up
Yeah,
here in the 60s, 70s.
yeah,
It can't get through that, which yeah, it might put the brakes on your Dixie a little bit. as that's the biggest component.
Yeah. Well, I think you have to say it's bearish because everyone, they were really pinning their hopes on this 50-day moving average that held for a day and a half.
Yeah.
So that's a pretty negative signal. Held it, took it out, we'd have to get back over 99.40 before I'd be convinced that something's changing.
But
Otherwise,
you wouldn't chase it down here though, would you?
no, no, I wouldn't,
If you
I
get a
went
break,
short it. Yeah, I went short it for the last 70. I was doing that up around par.
yeah.
So yeah,
So
my
Dale, it's
next,
at the 38% retracement, but there's a double top that's now playing. So,
yeah, it's
I
going to
mean,
be do or die for the dollar on this next break. If that 98, 97 and a half level doesn't hold and we don't get an advance, yeah, here we come 90. Not,
no, but I mean,
85.
even look at the last 25 bars on your chart that
Hmm.
that your fib levels are not on. That's a double top now. We've
Yeah.
broken through the neckline already.
Okay, so that gives you 96,
Yeah, my chart
97.
says
96.35. That's my guess.
Okay.
97.60.
Oh yeah, I'll set me out
Okay.
100
All
out.
right. I would try to. I tried down there with stops under the low because if we're just completing this first complete A wave, and I think it'll be what maybe a 61.8 pullback from the low to that 98 level, or 50%. I'm not sure. I don't have the fibs on this move. I don't need these anymore. That's for sure. So if we're at 98, what's a fib? Let me see. I could get. Okay.
It's a 618.
Yeah, 97.30 or so. Yeah. Okay. Anyway, that's what I'm looking for. And what are you thinking risk-wise, Blake, with S&Ps up here?
Well, what's going to stop the market in the year end? I mean, unless it's something that comes from the FOMC, I can't see anything really stopping this market unless we have a really hawkish Fed. I mean, the Fed's going to cut rates. Even K-Man said yesterday, and I can't disagree. How are they going to be? How are they going to be hawkish when they haven't seen the data? They have to be kind of neutral.
Yeah.
So and then if we get weak data, like even inline slightly weak data, that's a green light for the stock market just to rally into year end. Then your end of year flows. Who wants to stand in front of it? I mean, give me a reason to be short. I don't think there is one, Dale. Not right now. I mean, there's a lot of reasons in 2026, but
Well, I could give you one.
yeah,
Okay.
but Nvidia couldn't even stay really below. I mean, it's around 180, but it's
It's
above.
actually terrible
It is.
compared to the rally that we had.
Sure.
I'll give you one. I'll give you the mags. Their rally's been pretty weak. I certainly underestimated the recovery we could have in semis, so people probably were selling Nvidia and buying the other semis. But this has 153 in it. The market's done great with Nvidia doing nothing, but I still think this is. I don't know how the market will react on another 10, 15% down in Nvidia. I mean,
Yeah.
he's even going to the White House to try and get the stock to rally. He was there again yesterday, the CEO of Nvidia. And
Yeah.
Trump's come out.
Hey,
Go ahead.
Dale.
Yeah.
I'm just gonna say that people are having a hard time with my mic, so I wanna defer to Ryan and K-Man here.
Okay. All right. So, good morning, Kay.
Good morning, Mr. Dale. Good morning, everybody.
How are you, buddy?
Yeah, I'm not too bad. Thank you very much.
Okay. So, You doing anything in USD Max here?
Nah, not yet. It's tempting to buy it with a tightish top just under 1820, but the bounces are not really there. I'm thinking we may see a bit of a washout before this whole thing is this before it's over, maybe. No, I'm not tempted. I have I was long euros, long cable, long Aussie dollar, short dollar China, and I've reduced. Actually, the euro dollar is gone. I don't know whether we're going to make it straight away to 117. But both cable and Aussie as well are in front of a couple of interesting zones. 133.79 cable, so I'm respecting that. Let some go, and then you have that 66 and a quarter in Aussie dollar, which has been a very actively traded rate over the course of the months. You know, every time we came there, it's been a level of interest. So.
There you
I
go.
think we need, yeah, there and then even before and
Right.
back in July, it's been a stop there. So I think we just need to respect the levels a little bit. The run is fine, all nice. Had a bit in it, and what's next? I also don't know what's going to happen next week because I'm going to be off for a few days. But just grab the money and go. It's still not a market where you read things don't really run away, right? A lot of short covering, I think, in sterling after that budget, and we were talking about that with Ryan as well on the Flow show, but we're not so sure about how much longer it has to run. So yeah,
So we've had some dollar weakness and
yeah,
precious metal weakness at the same time.
lot of
Does that surprise you?
um, well. Let's say gold has not progressed and silver is coming back a bit from the highs. Does it surprise me? I don't know. This is not a lot that's going to
Doesn't. Yeah.
that
Nothing can
will
surprise
surprise. But I
us.
still think I still think that we are going to get a strong metals close of the year. But
Okay.
are we not going to go? Have a little look back at 4K before we jump again in gold. Is silver not going to look 54 and a half before we do it again? It's all possible for me now from here. A lot of people are talking about seasonals, etc., etc. But it's been such a strange year for up and down. Seasonals have been thrown out of the window as well regularly. So. I'm not going to bet too much on those things. Um,
Okay.
so I'm rather trading a few crosses right now. Still long Euro Swiss. Oh well, long again Euro Swiss. I actually let them go yesterday, but then I said, okay, it's not going down. I'm buying them back. And a bit long Aussie Kiwi, but those are really my main positions right now. So, and they are not strong crosses. So I don't have like very big conviction positions. I
Yeah.
was pretty convinced the dollar was going to get hit, but then, as I said, take the money or most of
Yeah.
it anyway.
Yeah. Bring the register. So
Yeah, keep the account empty.
euro yen. Yeah. Euro yen's let's see if it negates a throw over.
Uh,
Um,
um, it's we I showed it. No, I think I put it on the BTs this morning on the basic technicals. In the big picture, nothing changes. Still um.
to the BOJ.
Or sideways. Yeah, the BOJ is supposedly be a done thing now that they are going to hike, but it's probably going to be a 25 BPs hike. UEDA already said that they don't know and how much room they have more or where they can take it up. So, but I'm not buying here those yen crosses, right? Because the one thing that I think has played a bit of a role in today's yen move is that they had a very good 30-year auction over there, which is the best since 2019. And that's a very big
Yeah.
change because that may give us the first hint that perhaps, with a lot of conditional words in there, that the Japanese institutions are perhaps just starting to be ready to get a bit back into their own markets, which would be relatively good news for the government because they need to fund a heap of money, right?
Yeah. Do you have any concerns about the carry trade
Um,
unwinding next year?
there's there's a lot been going on there, and I actually saw your
Huh?
repost yesterday, and I said yesterday to myself, you know what? Tomorrow Dale is going to ask about the carry trades, and here we go. I can check it off my big I can check it off my bingo card. And we had a
I,
discussion about it as well in the room. There is how we could go on for hours about carry trades, but I'm trying to keep it short. There's a few things we need to monitor. People, if you are a foreigner and you're doing not a non-Japanese one, okay? If you're a
right.
foreigner and you've been borrowing yen for a long time and then putting it into other instruments, you may actually and still came up with that, which is a very good point, and I think some of it may already be ongoing. You can actually choose another funding currency if you want, without having to sell all your instruments that yield. Okay, you can perhaps go
Okay.
for a part into Swiss. That is one thing. For the
Okay.
Japanese accounts, obviously, it's a different affair because they are based in yen. They are not going to switch from yen into Swiss, for instance, because there's no use for it. The thing is, the 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 question really was asked whether it is really going to have such a big impact on bonds and equities because they're getting out of everything, or on currencies like Mexican peso, South African rand, or whatever. But I think it's going to go in such a slow and small waves that the impact will be visible, but perhaps not massive, because there is a way of diversifying your carry trade if you want to do it. For the Japanese, they are not going to massively jump back into JGBs for a starter and then sell all the rest out, which would be obviously having an impact on bonds and then in a second instance on equities. But they are not going to do that because they also want to keep their investments. They always invest with a certain strategy and a certain band of investments. So they are not going to change from 100 to 0. They are going to change
Yeah.
from 55 to 50. You know what I mean?
Trim.
Reduce
They'll only
5%
trim.
here.
Yeah.
Sorry?
They'll only trim.
They trim and the next and they probably, because they change investment strategy every year and they revise every 6 months. Okay, so in between you don't have room to go panic and say like, oh, okay, we need to get out of everything and repatriate everything into Japan. Yes, that would create a massive shockwave, but they are not going to do it because that is not the way that they do it.
Okay. By the way, Ryan, and everyone, this is a 2 week reversal in the making in the end. You guys have heard me talk about it. All you do is count back 2 weekly closes, and closing under 156.37 gives you a 2 week reversal. And it's the first one all the way up since we started. So there's at least a little shift. And now, if we make new highs in the end, there will be all kinds of non-confirmation. So, just something to keep in mind. It's a negative week in the end.
I thank you for your eyeballs, Dale.
All right, buddy. So, let's see. You guys want to comment on the Looney? Who wants to talk about Looney here?
It's looking a bit heavy at the
It's
moment.
trading heavy. Sorry, I
Yeah,
had to jump
It's
in there
heavy.
just to say that.
All
heavy.
right. All
It's
right.
in a bit of no man's land today,
Yeah.
but the bounces are getting weaker. The highs are getting lower. If we crack that 139.40 area, we're probably going to see 139 even pretty quickly.
Actually,
Yeah.
Dale, do you want me to? Can I jump in to grab the charts here real quick?
Yep.
All right.
You're better now. They could hear
Yeah.
you
Here.
better.
Oh, you can? Okay, that's good. And I'm also trying to speak a little louder too. This is really channel support for the Looney, and it's held twice now. So this level comes in right here, Ryan, at 139.40 is what you were just saying, which I 100% agree. But look what happens if we actually break. This is I would say this is the downside target. What would you be looking at, Ryan? Because this will actually coincide with a previous trend line too.
Yeah, well, 139 is the first area we'll get to where we'll probably see a bit of traffic. But yeah, down even lower than that, you're 138.50 ish.
Yeah.
That's another level altogether. So yeah, there's plenty of lines in the way. The next big one for me is 138.66, which was a series of highs we couldn't get up through back in through the summer. You might remember that area. We really struggled to on the bounce from the lows in the 135s. We couldn't get through that 136 and 66 for nearly on 3 months before we commenced this rally. So that's going to be my level down there, which is close to yours.
Okay. One of the other things I want to point out, and this is, right out of a technical analysis handbook, guys, just so you guys know. I'll zoom in a little bit to its sell-off, right? So we had the sell-off. I was playing it on the long side here, just trying to get long, and had a little false breakdown, but very limited follow-through. And notice where it stopped. So it stopped at the 38% retracement. And, when you have a move and you can only get up to a 38% retracement, that's what we call shallow, which means the trend is very, you could almost call it impulsive. The risk at this point is for a breakdown. That's where the higher probabilities are at this moment. It doesn't mean it's going to, but that's where the probabilities lay. I would say that you have now, because you only stalled at the 38% retracement, there's probably a 65% chance that it breaks down versus a 50% chance. And those are big odds when you're talking about trading and when you're talking about, everything that's happening here. So that's why you look at this chart. If you're a bull, you have to be very skeptical. And if you see dollar weakness really coming in, you should be like looking at the dollar Canadian, because it's not acting well. As bearish Canadian dollars as I am, and I am, just so you guys know, I know right now this is not the time to be a Canadian dollar bear, especially if you start breaking through this channel support. So anyway, I'm just trying to illustrate how weak the price action is. And another pair that price action is really weak is the dollar MEX. And I know, I've actually tried to be on the long side here unsuccessfully. I bought it at 30, I think I bought it at 34 or something, and I sold it yesterday at like 29 or something. I've tried to get long down here. It is, you have to be picking it off right at really critical support, because if it breaks, look at how weak this thing is. If it breaks, we're going to clear this long-term 618 retracement that I actually bought it at 1819 or 1818 when it was down here the first time. But hell, just look at the price action. It's just wedging, ready to break down, and came in. You said it. It looks like there could be a washout here, and if you get a washout, you could trade down to 1750 pretty quickly on the dollar MEX if people really just said, you know what, screw it. Stocks are going to all-time highs. S&P is going to 7,000. Hassett's coming in. Dollar's going to get crushed. Why can't we, at this point in time, trade down to 1750 before seeing a recovery? The price action is just so heavy. Anyway, I needed to say that because you can see it in these dollar pairs. As much as I'd love to be a dollar bull right now, it's hard to be a dollar bull. Very, very hard. Ryan, what other instruments do you have on your radar today before we go into the weekly unemployment claims?
On the good old radar, well, actually, I'm looking at that dollar MEX as well, because Yeah, I think you're right. You've got to be picky in where you try and trade this one. I wouldn't trade it in the 30s, 40s. You either trade it at 50s or you trade it down in the 20s. So that's my view. I'm still long a bit. I had a little nibble off, but it's not bouncing a lot. But we've
I know
done
you
that at the
keep
top
picking it
too.
off of the support, which is great if you have to be very precise right now.
Yeah, exactly. Otherwise, Euro Sterling's looking interesting because we've got this bit of a speed move in cable ballooning up, and that's with the euro slowing down a bit. That's seeing Euro Sterling down. There's probably a bit of negative unwind going on still from the budget. Maybe a bit people, as Kay mentioned on the Flow Show, been heavily short for the last 3-4 months, squaring up into the end of the year. It's going to cost you to sit in Euro Sterling longs. But yeah, we're getting down to a level 86.20s is my number down there. We'll see support from about 30s. So I'll probably give that one a little look if we trade down there.
And 86.20, that's
Sorry,
far.
87.20. Sorry.
Oh, I was gonna say that's like an eternity away. that's
Yeah,
a
yeah.
that's a full
That's
big
next year's
figure
price.
away.
That's next year's price.
Yeah, yeah.
Well,
Okay. So one of the
what would
things I
tell
want.
you have a trend change on that, Ryan? I know you're bullish.
Right. All right, K man, what are you looking at today? I know you just named off a bunch of
Today,
things, but
well, as I said a bit earlier, 133.79 cable, 66 and a quarter, 30 Aussie dollar. Could be that it's enough for now, just for this round, because those are levels that have been showing up. So mainly those two. Uh,
I mean,
Euros.
the squeeze in Aussie really caught me off guard because
Mm,
we were trading, so heavy last week, and then post
mm.
CPI, I tried to stand in front of it, didn't work. I was like,
Yeah,
okay, maybe they're just going to look past it, but I mean, even with the GDP, way weaker than expected
no,
on Tuesday, well, Wednesday morning in Australia, it's still ripped higher, and boy, it's really
that's.
holding up pretty well, right?
I think that was debatable, the calling the GDP really weaker, because it was, if you look at the year on year, it was still the best one in the past 3 years. And
It was just 2.2% below what the market was expecting. But regardless, it ripped anyway. It dipped 25 pips, and they picked those 25 pips up within, I was watching it, within 45 minutes, we had
yeah.
recovered everything.
Mm.
So, and
Yeah,
Kiwi
I've
also.
taken most of it off. I've taken most of my long off ahead of that 66 and a quarter now. So
Dale, here's one for you. You have a descending wedge in the Kiwi, all the way down to really critical support. We're not making new lows. We came off of out of that wedge, and as you like to point out, ascending wedges sometimes they can reverse and completely reverse the whole thing. Look, we're at the
Uh,
38% retracement right now.
yeah, so it is so great when my students really learn what I think about wedges.
There you go.
And
Like
so, yeah,
if I was
okay, I
standing
could go
next to you,
there.
wish I could give you a wedgie.
Okay. Oh, I thought you were going to say a hug. Anyway, oh, yeah, it's viable.
Yeah.
Yeah.
That's why you look around, Dale, and that's why when you're seeing like the Aussie reversal, the euro is, look, oh, I drew this out last night actually. Oh shit, I didn't want to do that. I drew this out last night. No, move it. There we go. All right. This is a rising channel in the euro across the lows and across
Yeah.
these highs. Now, that's a rising channel. We've done a lot of work and a lot of consolidation since this summer. I mean, we have barely pulled back. We've been consolidating gains since the beginning of the year. Beginning of the year, summer, sideways. We're not giving it up.
Right.
Now, there's a good chance we could rally into 118. And I was thinking, how do we get to 120 to get to this long-term trend line, to the symmetrical triangle resistance? And really it is, if we stay in this channel by
Yeah.
the end of the
Top of the
year,
channel.
yeah, we could be right at 119.50.
Third
And
drive. Third drive.
all right, third drive it is. So that's why you look around and man, there's a lot of risk out here. Oh, hold on. We have data coming out. How long do I got, Ryan?
Not
Cayman
long enough,
testing.
so I'll shout it out.
Okay. All right. Here's the. I have the dollar index. We have weekly unemployment claims, Canadian trade balance. Yields are to the right. S&P right in the middle, and dollar
Well,
index.
191 for jobless claims. Better
Oh,
number.
very
What?
good.
And
100
continued
and-
claims down as well.
Oh my God. Woo! Those are some good jobless claims right there. I mean, the dollar just spiked. We had the
Is
euro.
is the Fed going to hike?
Yeah. Like, but what's interesting is we got the dollar strengthened. We saw, well, you can see the dollar, dollar strengthening right here. Um, but
Yields up.
yields are up. S&Ps like it, or S&Ps are, they don't know what to do with it.
Unchanged. Yeah.
Yeah. Well,
Definitely
you know what?
uncutish.
What's that?
Definitely uncutish numbers.
Yeah, yeah. I mean, but again, you have you have everybody just stepping in front of it saying, yeah, but I see the data, but you still have Kevin Hassett coming in because if it was Mark Chandler stepping in as the new Fed chair, things would be different.
Mr.
We would
FX can explain what's going
we
on.
would see dollar strength if Mark Chandler was going to be the new Fed chair, but unfortunately, we're going to get. It looks like we're going to get a Hassett. So I'm really excited to hear what Mark Chandler from Bannockburn has to say about everything that we've seen in the markets. But I want to, before we bring in Mark, I want to say thanks, Ryan, Cayman. Great to have you guys here, and Dale. Always great, with your hosting. And your analysis and your old school approach to the markets, as far as technical analysis goes, we all appreciate it. But Mark, what do you have to say about Mr. Hassett?
Oh, thanks. Yeah, I don't know. I mean, I'm still, I'd say I'm only about 75% convinced that Hassett's going to get the job. I know that's what all the odds are favoring him, but I see a pushback from Wall Street, and the decision's not made until it's made, of course, especially in this administration. But at the end of the day, I mean, I know we all want to think that individuals make a difference, and sometimes we do. But remember, the Federal Reserve chair is really a chair of a committee. And we've seen other central banks like the Bank of England where the chair is outvoted. There was an attempt to outvote Greenspan, and that mutiny failed. But the idea is that the chair is just one person, and I think that it's one of the few things that I've heard Treasury Secretary Bessent say that I agree with.
Okay, well,
But
Mark, before Dale takes over, I want to ask you just a couple quick questions because this is relevant to this topic. As far as the Kevin Hassett situation, he obviously dropped his name, whether it was on accident or it was intentional. He dropped his name as he introduced him as the incoming Fed chair on accident. However, when he did that. And he's getting all this pushback from Wall Street. He said he had said I'm not making my decision until after the first of the year. So could he just like literally he might be getting pushback and people Wall Street's saying, hey, don't do this, and he probably has Jamie Dimon calling him or whatever. And he's like, okay, well, I'm actually going to end up choosing somebody else, and maybe you have that 25% chance it is somebody else, Mark, that you're thinking, but he's not going to tell us until after the beginning of the year because he just wants to ride out the Hassett effect right now, because right now the dollar is weakening, stocks are rallying. Why disrupt that into year end? Your thoughts?
yeah, so I think something like this. I think that when we play poker, you either play the game or you play the player. And I think we're best served by playing the game now. And the game is that the US economy is slowing. And regardless of who becomes the chair of the Fed, the market is pricing in 2 cuts next year and about a 60% chance of a third cut. That seems broadly prudent to me. I think that the real question, I think, is something like this. So if say that you're right and Hassett gets the nomination, what does Powell do? His term as chair ends in May, but his term as governor still has quite a while to run. I suspect if Hassett gets the nomination, Powell stays on as governor. There's a little bit of precedent for it, though it's uncommon, and I think that is Powell will do that to try to preserve what he believes is the independence of the Federal Reserve. And so I think it gets, we really have to game it out, but I think that we should assume that the Federal Reserve is going to move in line with its assessment of the economy. And one of the indicators I've been looking at lately is from this survey, Conference Board survey, jobs hard to get, jobs easy to get, and that seems to be deteriorating. I know we saw this jobless claims dip today. I really write that off because of the Thanksgiving holiday. Probably distorted it. It's oftentimes happens around the holidays. So I think that whatever the Fed decides next week, and I do think they're going to cut rates 25 basis points, I don't think that today's weekly jobless claims or even tomorrow's personal income and deflator data is going to change that.
Okay, and I know Dale. Sorry, I'm totally cannibalizing this, Dale. Really quick, and then I'm going to shut up, and I'm going to let Dale take
No,
take
why
the helm.
don't you just finish it?
No. Sorry,
Yeah,
Dale.
go ahead, man.
No.
Go
I
ahead.
just have questions for Mark. I haven't talked to him in a long time. Sorry. No, but the other question is, are they going to leave? Are they going to leave the door? A lot of people are expecting a hawkish cut, which as our team's been saying here, K-Man's made a great point. Like, why would it be hawkish if you don't see the data till after the FOMC meeting? So anyway, I'm going to leave with that question, and then I'm going to let Dale take over. So Mark, great to hear from you. Maybe we can get an answer from you on regards to that.
So I'm thinking that, here's what I think we all know. And it's not a judgment call, it's just looking at the data and looking at how the markets responded. After the September 17th rate cut, dollar rallied. After the late October rate cut, the dollar rallied. We've now gone, I think this is day 9, or maybe we're challenging day 10 of the euro's appreciation. We've gone in such a streak here of the euro getting stronger, dollar getting weaker. I have the euro has rallied now 8 days coming into today, and it's a little bit lower on the day. And the dollar index has sold off, commensurately, and the dollar index is off for 8 days coming into today. It's a bit higher, so I would look for the dollar to strengthen a little bit
After the Fed,
before
Mark?
the Fed in the run up to the Federal Reserve, because people who have been
Okay.
short-term momentum people, are going to cover their short dollar positions going into the Fed meeting because the last 2 Fed rate cuts have seen the dollar rally afterwards.
With
So
yields. With yields.
with yield, I don't want to draw too close of a relationship there, but yeah, I could see that. But remember, the Fed's cutting at the short end, rates are going down, and the dollar rallies. It's almost like sell the rumor, buy the fact. They
Yeah.
sell the rumor that the Fed's going to cut rates. It's well signaled, and the dollar bounces back afterwards. And so I think I've been bitten by that dog once. I don't want to be bitten by that dog twice, let alone the third time.
What about a different dog?
Yeah, I could take a different dog. What do what do you have in mind?
Anyway, how about a dog that trades down into the Fed, that people are still bearish because of what they think, that the cut's going to come, and it ends up being sell the rumor, buy the fact around 98 in the Dixie, and about 17, a little bit over 17 to 18 in euro.
Yeah, I think that. So what I've been really using as a sort of a working hypothesis, and I think it's important that we have to really treat our ideas like hypotheses. We have
Right.
to hold on to them, and then we have to reject them when they show them they're fickle. And so the working hypothesis I've been using for the last couple of weeks is that the dollar is retracing the gains since
Right.
September 17th.
Right
That's when the
here,
dollar
Mark.
index made its extreme. That's when the
Yeah.
euro made its extreme, a bit above 119. And we're coming into some important levels. And then when even with your charts there, Dale, what I also see is besides this retracement of this move since September 17th, is I'm seeing double tops, like there in the
Yeah,
dollar
right
index that
here.
you're showing now. I
Right.
see the double bottom in the euro. I see a double top possibly in the Canadian dollar. And so I do think the dollar is going to be falling. The dollar's downtrend will resume. But I think that we've already got, like I say, I mean, the dollar index down 8 days in a row coming into today.
Yeah,
Yeah, I know every day is unique, but this is a long streak.
it
And so
is.
I'm just hesitant. I'm thinking that a lot of people have gotten short here, and I'm just a bit hesitant to jump on board here as we approach these key retracements.
All right. Well, then, what do you think is going to be taken out first? The September low or the double tops?
Well, that's interesting. Yeah, I think it's going to end up to be the September lows. I
Okay.
think that these are important levels that I think the dollar got to, and I think that sentiment has turned again. So I think it was Blake who was talking about how the dollar sell-off is really, for the most part, a first half story. I know we made marginal new extremes on September 17th, but the dollar's really been broadly consolidating, and I think that consolidation is a correction
Right.
after the big sell-off in the first part of the year, and I think that that sell-off is part of a larger
Yeah.
down move in the dollar after a huge multi-year rally.
Yeah. The debasement trade is alive and well.
Yeah,
That's
I
what
don't know.
people
I'm
are
hesitant to
calling
think
it.
about it as a debasement because, I recognize gold is up. In fact, I was listening to what you were saying before about silver, and I'm fortunate because I liquidated my silver position yesterday. I've caught a good move in it, and I'm getting a little nervous at these levels. And I sort of was burned earlier this year. I had played some of the rare earth stocks, and I loved that early momentum that we saw earlier in the fall. And I never really rebalanced. So when the rare earth stocks came off, I gave back a lot of what I had made.
Yeah.
I don't want that to happen in silver.
Yeah. Okay. Do you have a view? I mean, if you're thinking the dollar's going to break down, and then, well before that low in September, everyone's got the weekly trend line that we just held. I don't know if I have it, but there's, a weekly uptrend that this low held. And if we take it out, that breaks down to like a 10-year, some type of trend line, massive trend line. So if we're going to have a lower dollar and we're going to take out that low, are we talking like 90 in the Dixie mark or, because that would be real bad technical damage. So, that's why I think that this is just A and we can get a B and we could still get a C to the upside. And the bear market rally would be complete more up here and have washed out a lot of the dollar bearish sentiment. I know it's building again because of this double top. And I'm wrong under the low, but I think I would, I've been waiting, besides being a little bit short the dollar, for this to be a buying opportunity in the Dixie. So with what you see coming in 2026, um, what could generate a dollar rally going into next year?
So what could
Support
generate a dollar? I think what could
dollar
then
rally.
Yeah,
Yeah,
what could generate a dollar rally? I mean, that's interesting. What could generate it? I think we need to see we need to see the resilience of the U.S. economy. And many of the central banks that have been cutting rates this year, like the
yeah,
ECB, like the RBA,
yeah.
they're done. The Bank of Canada, if they're not, the market is saying that they're done. Looking at the swaps market, so could there be a reversal? Could the market? Could we have the story wrong? Could it be that the U.S. economy is resilient? Fed doesn't really cut rates as much as the market thinks next year, and other central banks are forced to cut interest rates. And I think it's possible. I just don't wouldn't have that as my baseline forecast there. And
Well,
like
I still can thank you for helping me rationalize my technical outlook. So really you root for, all the recession fears going away and, GDP does better next year. And a
I,
lot of people are talking about that with the big, beautiful bill bringing in a lot of stimulus into the economy.
Yeah, I don't know about that. I mean, I'm
Okay.
still skeptical. I'm skeptical about the $2,000 per adult person,
Oh, that's
the
great.
CARES
Yeah.
refund. I'm
Yeah.
skeptical about the 50-year mortgages. I think these are all just like smoke and mirrors. But I was thinking that the dollar index was going to fall to about 95 this year, and we
Yeah.
stopped, of course, shy of that. My target for next year, like you say, is that the lows we saw in early 2021 around 90. I still think that's
Okay.
reasonable. I think that for me, the story is, and again, it's not so much forecasting the future as recognizing what's happened. And that is the dollar index itself peaked, like you have on your chart. I think
Right
on the
here.
earlier chart, the dollar index peaked in 2022. It's 3 years ago. The dollar's been in a bear market for 3 years, and the low for that move took place in September. So I think that until proven otherwise, we have to assume the big trend in the dollar is lower. And I think that
Okay.
a combination of weak U.S. economic data, I still think the U.S. economy is going to be weakening. And this is really what the Fed says as well. The Fed's idea is that the economy is moving back to trend, not a recession. But what do they say trend growth is? About 1.8%. And I think that's the Fed's forecast for next year.
Okay. All right. So, along with that, uh, do you pay attention to all the talk about the overnight repo market and, uh, some of the things that are happening in the plumbing, as well as some, the private credit market is so opaque, and we never find out what happens in that market until someone's filing.
Yeah, so of course, I mean, I think people like myself, try to follow some of the plumbing. And I think this is
Yeah.
what's happening. Uh, Foreign central banks, while they're still buying treasuries, we've got a lot more supply. And who's been buying US bonds? Who's the big featured buyers? The hedge funds. And how do they finance it? Through the repo market.
Right.
And so because of the use of the repo market, the Federal Reserve has, I think, waited a little bit too long to stop QT. I had thought they were going to stop in September. They didn't stop until earlier this week. And so what this leaves us in the condition where the Federal Reserve is probably going to have to begin building reserves again. And that is made possible not by buying the long end of the curve, but
Yeah.
by buying T-bills. And I think that people are going to confuse this with QE. Remember, quantitative easing is when your rates are near zero and you still want to ease monetary policy. Expanding the balance sheet to boost reserves is really what the Federal Reserve has always done, but it had done it at a slower rate previously. I think that the markets are dynamic, and how we try to make money, and especially in the leverage community, shifts around a bit. And now I think it's really the basis trade and using the repo market to buy bonds. And I think that that is causing some stresses, and it's hard to see how that unwinds.
Okay. So, well, the Fed's injecting, so you don't see that as an issue.
Well, I think that it could become an issue. And it's really like one of these, it's a snake eating its tail, right? In the sense that
Okay.
you've got banks, actually, you got the hedge funds, non-financial institutions buying U.S. Treasury bonds using the repo market. Fed gets concerned about the repo market, the level of reserves, so they add reserves, which helps the hedge funds. And so I just don't see I don't see that cycle breaking, but I
Yeah.
think that that's just sort of the latest dynamic. So I do think the Fed's going to be buying T-bills, and I think that people will confuse that with QE, and the Fed will lean against that, trying to explain why it's not QE.
Okay. Looking at the long end, and I know you pay attention to bonds, just technically, Mark, and you're a great technician as well. But when a breakout level is tested multiple times, the more times it tests that level, the less you could trust it. It's like banging into a door. Maybe on the 10th attempt, it'll open. Um, this to me looks like a pretty important area in TLT, and we start closing under it. It portends higher yields on duration and yield curve steepening. Is that where we're going?
I'm not so bearish on US bonds. I mean, we dipped below 4% last week and it's come back a bit, but I think for me a resistance. I'm thinking about the yields rather than the price of the tilt.
Okay,
But I'm
there you
thinking
go.
on the yield, 420 is important level. We
Very
haven't been
important. Yeah.
we haven't really been above there since early fall, and
Right.
I think that next year we'll see something closer to 375, 380. I'm still long. I told you a couple times back when we were talking, I
Yeah.
had put my
You're
equity from the apartment I sold in Manhattan into U.S. government bonds. It's still there. I did play around a little bit on the edges, buying some ETFs for foreign money markets, which really lets me play a shorter dollar view as well in that, but still staying in the fixed income space. Look, at the end of the day, I think that U.S. real interest rates are still low. You talk about 3% inflation roughly in the U.S. You talk about 4% 10-year yield. I just don't see I don't see it being so tight.
okay. Mark, I had to call you Mr. FX today. And you know why I believe that? Because you were trading foreign currencies before it was available to the public, where it was only the bank market was only between banks. And IMM futures were the only place you could really trade currencies in the US. And you were there doing it then, even before retail trading, many years before retail trading became available and popular. And you're kind of like an Iron Man. Who was the Yankee? Who was the Yankee? Lou Gehrig, right? He was the Iron Man. And as far as I'm concerned, I've interviewed hundreds of different people. If I had to give the title of Mr. FX to anybody, it's you. It's you, bro.
That's very kind, but maybe I could share with you then. You know, the Bretton Woods became effective in 1946. So for 40 years, the foreign exchange market was evolving. And I began writing daily commentary in early 1986, 40 years after Bretton Woods became operational. And next week probably will be my last daily comment. And like I say, I've been writing for 40 years, and I think I'm going to just move to a weekly and a monthly commentary and have some less formal, shorter term commentary. But yeah, 40 years of daily commentary in one form or another, different banks, hedge funds, uh, and I'm looking forward to that, to taking a little bit of a step back, but also helping to clear up in my own mind, it's hard, I think, to manage these different time frames. And so I think that trading is so difficult that we need to use technical and fundamental uh,
Yeah,
inputs. And I think that, in the market, when I first began, I began when I was at the floor of the Chicago Merc. They just had
right.
moved off of chalkboards to post bids and offers in the foreign currency futures.
I was handing orders off, Mark, when they had chalkboards there.
So, it's funny. Now the foreign exchange market, $9.6 trillion a day, average daily
Yeah,
turnover, according to the BIS. So my approach has long been recognizing the size of the foreign exchange market relative to world trade. I really emphasize those factors that influence capital flows.
yeah,
Sometimes for relatively small or closed economies, yeah, I'll look at trade flows. But for the most part, I think that the major, say, G10 currencies, much more understandable by looking at capital flows. And this maybe touches quickly on the what you guys were talking about before about the yen carry trade. Many people think that higher rates in Japan, and it looks to me like, of course, they're going to hike rates next in a couple of weeks. That many people think, oh, higher yields in Japan, they're going to keep their money at home. But this is one of these identities in macroeconomics. Japan, despite having an undervalued currency, runs a trade deficit, but its larger balance, current account balance, is in surplus. When they have a current account surplus, a country that has a current account surplus has to export capital. to me, the Japanese are always buying foreign bonds and stocks on a trend basis, and they have been doing so since the new prime minister took office. The real tell, I think, is not so much what Japanese are doing, but what foreigners are doing. And foreigners, despite the low yields available in Japan, foreigners have been buying Japanese bonds. In fact, I think that in October, the Dealers Association in Japan says foreigners bought a record amount of long-dated JGBs. Because when we think about it, I know on the retail side, we often think about we buy an asset, we want the asset we buy to go up or the asset we short to sell off.
Right.
But for the larger pools of capital, the currency transaction is very important, whether it's a currency transaction to buy the underlying instrument or to hedge it. And I think that's where the yield and where the real play is in Japan. Foreigners can buy uh, JGBs and sell the yen as a hedge. And they can pick up more on that hedge, their currency hedge, than they do on the yield in JGBs. So it's a much more complicated game, I think, for the large pools of capital. And the currency is a key component. Swapping the currency, hedging the currency becomes a key component to the total return. And I think it's a bit like trying to play chess on one level when someone else is trying to play on three levels. When you have the currency component, it just needs to be incorporated more, I think, into people's understanding about the carry trade and about how the large pools of capital are really moving in and out of the Japanese market.
Well, Mark, in this business, there are a lot of sharks and barracudas in this business, and you've been a great ambassador for what FX really is. And appreciate that our paths crossed, and congratulations on that 40 years of putting out daily commentary. So
Dale, I wanted to jump in too and just say, Mark, you have been just a blessing for me. I've been trading FX since 2002 predominantly, and I've read your commentary almost daily since then. So thank you from the bottom of my heart, and from the rest of the community. We were just talking about it in our chat room, how this will be a loss for us on a daily basis, not being able to read your commentary every day. So thank you,
Hey,
though.
thanks. It's very, very kind of you to say. And I think I mentioned this before too. It's like, I don't think that there's anything that I do besides just putting in the time that anybody else, that it's all available for everybody else as well. I think that what I've been really fortunate by is that my employers don't fully appreciate me and let me post my commentary free on the web. And that just shares. And I think it's really very much along what Thomas Edison said. He said he didn't fail. He found 10,000 ways it didn't work. And so I hope that we can all learn from each other's experiences, and that's why I enjoy listening to your show. So thanks a lot.
Mark Chandler, everybody. Now, there's someone you could say legend. And that's a wrap, everyone. Don't just count your pips, count your blessings. Good luck the rest of the day. We'll see you for TGIF, and adios. See you later. You're welcome.